This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus you got 9 out of 10 stars from the Coin Bureau guy. Bityard! Hello everybody, welcome back. Let's have a look at Bitcoin, altcoins, a little bit of an overview of traditional markets. Nothing, to be honest with you, there's really at the moment nothing different at all outside of the fact that it's a new half, a new quarterly, a new month. So let's look at what I think is going to happen, which is pretty much no different to everything else we've been saying this whole time. Outside of the expectation of the everything bounce, which to be honest with you still is teetering on the brink of taking place, seeing oil dropping off once again, toying very realistically again, just like it did last Friday with the idea of breaking down and closing below the center of this Bollinger Band on a weekly here. So for that, on a TA basis, this doesn't necessarily mean that it's going to continue down, but it has a 65% more likely of continuation if it were to start closing below a Bollinger Band center. It would be even better if it closed below the 21 exponential, which is almost, I like to use it as like a shadow of the center of the Bollinger Band. So if we're below both of those, excellent. Now we did this last Friday. I'm looking at this on a weekly. Last Friday we came all the way down. I was getting very, very excited. Sort of approached that $100 barrel zone for oil. I then got sucked straight back up again. Straight back up, closed above the Bollinger Band, and so on and so on. So it looks like we're trying to do the same sort of thing again. Whether it's a fake out move to the down and get sucked back up to close above this 20 weekly again. We'll have to wait and see. But closures below here is kind of exciting in a way, because lower oil is obviously good for everybody when it comes to filling up their cars and stuff, but it should reflect on inflation data, which is not due for another 2 weeks, to be honest. And so the whole point of us talking about this everything bounce after the last CPI was to monitor oil, wheat and Dixie to give an idea of whether or not we're going to show a peak or not. At the moment, though, it does look like we probably will have a peak, but it remains to be seen. But if we continue to close oil below about 105, 104 to be safe, and consistently close below 104, then yeah, I would say that it's pretty certain that inflation will have peaked. Now that doesn't mean that all markets go into a reversal. It just means that the everything bounce that we are looking for and hoping for will continue, and actually we get a bear market rally, if you want to call it that, or maybe not so much a dead cat bounce, but just a bear market rally. So for the Nasdaq, this is the Nasdaq here on the weekly. The main problem we've got here is this 10 exponential here. So rejection over here, front run over here. I suppose this is a 100 simple moving average rejection there, but 10 exponential, 10 exponential, 10 exponential. So whenever we have these rallies, the 10 exponential on the Nasdaq is the thing that pulls it back again, and that's happened again just this week. So the everything bounce almost completely cancelled out at this stage, but again the week is still not yet closed, so we'll have to wait and see. And the Dixie, unfortunately, well, I would say has formed a cup in handle. Let's have a look at this on take it off the log scale. And so I mean, you can see this for what it's worth. Let's just make it a little bit bigger, turn off all this noise, because it is just a formation. So more or less it's a cup in handle. So here's your cup. You could look at it like that, basically. There's your handle, and we're now looking for what could be a breakout trade. So if we get a breakout for the Dixie, then obviously we'll be going back to wrecked city again, regardless of oil, because the Dixie is one of the main things to focus on. I know it's old and boring, but it's true. And we said this all last year. Well, not all, from about September last year. So the Dixie is going to go into an uptrend this year, and it certainly has done that. And it looks like it wants to continue. Like I say, this is a bullish formation, provided we break outside of this handle. So you don't sort of trade this in any point until we break out. It's a breakout trade formation. So we've not broken out yet, but we might do. And if we did, then we'd be targeting these upper areas. First of all, 106. Then obviously I'd probably say its main destination We'll take it onto a weekly or a monthly even. We'll have a look at its next destination really. So we got that 106 at its next level. Take off all this noise. Very noisy chart really. We'll be targeting probably areas around about here, between 112 and 115. So there's your Dixie. Bitcoin dominance coming down again. So it had a bit of a move up and then down. Bitcoin sort of pumped and dumped in the night, and obviously yesterday we saw a bit of a dump across the board. But altcoins coming back strong. So the buyers are still stepping into altcoins. Altcoins are far from over as far as buyers are concerned. You know, there's still money to be made, and I suppose that, you know, this is probably going to be part of the issue that we've got here, because there's a general theory out there, which is that, you know, like last bear market, the bear market won't be over until all alts are completely washed out of the system. We see a massive uptrend on Bitcoin dominance, and that might be true, but for the moment, this cycle's, I mean, as far as time is concerned, it's worked in the same way as the previous cycles, but as far as behavior, it's definitely different. And so to think about how things behaved identically to the way that the last bear market behaved, I think for Bitcoin it might be okay to say that, but for altcoins I'll probably disagree. They are behaving generally different, and as far as market cap is concerned, certainly is different. We have a quick look at the dominance chart over here. I mean, this is your bear market beginning. Right down here, there's your bubble pop, and we came all the way down here, and then we started to trend, you know, throughout the year. Now until where did the bear market end? More or less here. So it was a much bigger increase in dominance, but also I have to say, yeah, as I'm sure you probably know, that the total market cap of all crypto, including Bitcoin and altcoins, was a lot smaller than it is today. In fact, the total market cap of all crypto at the peak of the last bull market, as in 2017 into 18, wasn't even as high as the altcoin market cap is right now. So it's worth thinking about that. It is a different market. It's still full of money, and whether or not that money wants to get flushed out or not, or if they're holding on for dear life, it is a different market. Like I said, there's been a lot more development. Fundamentally, some of these altcoins are strong. Maybe not so much with their price, but with their development and their well, I suppose their march towards their achievements, really, which is why I think a lot of people are buying into these altcoins now, similar to the vibe of a dot-com bubble back in 2000, where everything was overinflated, everything went up, which you could agree that that's how the altcoin market was a year ago. Everything just went up crazy, just went mental. And then it popped, and then throughout that, I think certain things will emerge. And I've made a video a few weeks back about which ones it is that I'm buying, and it's not that I'm expecting enormous moves from them. I just want them to be effectively scam-proof. I don't want them to turn into lunar dust. So I'm going for the ones with development, the ones with charts over 2 or 3 years for the most part, and ones that have passed regulation standards as well. So all of this, unfortunately, is part of my boring hodl strategy for altcoins. And then when the time is right, obviously we make appropriate trades, but it's not really an alt trading environment, I would say, not for a, you know, instant gratification, massive, you know, epic trades. I don't think that that's really something we should entertain right now. So let's think about Bitcoin and wrap this up, because I suppose, you know, this is supposed to be a crypto channel. We established on the weekly, didn't we, a couple of days ago, that the money flow index has dripped down to an all-time low, much lower than the previous low, which was also an all-time low. So this being extremely low, we'll have to think about it in the same way that we saw this one form, which is that, all right, it's low. This isn't necessarily, although it could, but it's very unlikely, spotting a bottom just from the fact that it's low. It's very low, so we might be able to find the same read that we were hoping for previously, which is a divergence. So we didn't get our divergence there, but this is extremely low. Like I say, it can always go lower. But we will be looking for the next read over the next few weeks, months, to print divergence. Now, if that divergence seems to kick in with a new low around September, that would match in many ways the market cycle model for the the Bitcoin's 4-year market cycle bear market situation to end around September, October, November. So we would be looking for divergence between now and September, really. So we can trend all over the place for Bitcoin right now. We can chop and we can be all over the place, just like traditional markets, all facing down. And we might get a decent move up with all markets if the everything bounce actually kicks into full effect. And that could bring us up to the summer lows, I say last summer lows, about 29,000. And that would be a significant area of resistance at this point. Again, look, we're still in a massive descending triangle. For the ultimate trade, you would look to trade the breakout of this triangle. And again, if we marry the idea of cycle, which would be September, October, November, finding its bottom and starting an official uptrend, we marry that with money flow index weekly bullish divergence, and a breakout of this formation between now and, like I say, we'll be looking for September, October, November. Then that'll be a perfect, setup of three things altogether. If we can also think about what oil's doing, what Dixie's doing at the same time, it could create the perfect storm. But for the moment, there's nothing outside of what could just be considered bear market rallies, which can be decent. If we did move from where we are right now, more or less, to the summer lows, it's a 50% move, and that's just for Bitcoin. With the way that altcoins look as well at the moment, which isn't particularly bad, versus their Bitcoin pairs. Although it is a little bit, they are on thin ice, but they still have the upper hand ever so slightly. If we think about what that means, then yeah, there's still money to be made from a trader's perspective, whether you're trading into Bitcoin or even into Tether. There's still, or futures if you've got the, if you're that way inclined. But basically, for those who want to play it safe, you may as well just think about monitoring the market overall between now September and hodling some cash together for what could be a much better entry point with immediate gratification, breaking out of here between September, October, November, with a divergence that's formed on the money flow index. If we think about what that would look like, so we'd have the money flow index would start to come up, then come down to make a I don't know why I'm doing it like that. Then come down to make a higher low, and then maybe even another one after that, forming some lower lows on Bitcoin, and then breaking out again over time, and we'd get our divergence. So that is basically the deal. For the more cautious investors or traders, there's absolutely nothing better, I would say, than just sitting back and waiting. It's not long. We're in July, we've got September. It's not far away. September is the earliest, I would imagine. But if you're really waiting for a Bitcoin entry at what could be considered the lows, just like I did last time, I waited the whole thing out, waited until I felt like the lows had been in, and I bought as soon as we reclaimed that Bollinger Band just before April, and sat in a Bitcoin position and traded altcoins, throughout the next bull market, which was a fantastic, amazing time to trade, where things were forgiven quite quickly and easily. Even if you'd made a bad trade or a bad spot position, it usually would turn around in your favor over time. Whereas at the moment, that's not going to be the case. At the moment, it's very much a deadly trading environment for spot traders, unless maybe you're willing to use trading bots. So I made a few videos on those if you want to think about that. Outside of that, though, for an investment purpose, still pretty much risk off on something like Bitcoin and altcoins. Doesn't mean that you can't be rewarded over time from buying these lows. I would seriously entertain the idea that dollar cost averaging into this zone and lower is still a really good thing to do. But if you don't have loads of money to spare, or if you want to just see some good results quicker, then you might as well think about waiting between September, October, November, and see if those things click in together. So, like I say, money flow index, breakout of the formation, and Dixie, oil, inflation, traditional markets, how they're behaving as well. There's all the things that I've stated in the video. But other than that, right now we should just expect a chop. Maybe a new low to be formed, any minute, or over the next few weeks or months. Between now and September, it's pretty much anyone's deal, to be fair with you. Looking at short-term timeframes will give you a little idea of maybe what could become an alleviating bounce, and maybe we could move up from this point forward now to about 24,000 before we find another rejection that brings us down to a new all-time low. These are all extremely possible. There's really nothing to say that can't happen. The chart would permit a move like that, but it could also break down. We're at the mercy of many things, geopolitical and economic, so it's not as simple as staring at the charts, although the charts do give certain reads that can, you know, offer certain moves. It's a dodgy time at the moment to think about trading. So again, you know, bots can trade the chop for you, and you know, I'm expecting some decent results over the next year from the bots that I've set up, and I'll continue to set up. But generally speaking, it's definitely a risk off, definitely a risk off situation. But third quarter is likely to be less aggressive to the downside, in my opinion, than this last quarter that we've had, which has been horrendous. So I think it's going to be less, less volatile and less aggressive, less painful. But it doesn't mean that we're going to do anything special. I just think that we'll basically chop around, you know, between here and maybe the next the fourth quarter, where effectively Bitcoin's market cycle should come to an end and begin another uptrend from there that would last basically 3 years. Anyway, it's not long. And look, it's the summertime. We can enjoy ourselves, can't we? Let's just enjoy ourselves. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.